I started trading crypto in 2023 and by 2025 I reached financial freedom. Now I'm on a mission to share proven strategies that lead to real financial freedom. No hype, just result. What's up guys, it's JC here again. Bitcoin suddenly dumped all the way down to 110.5 and now it has bounced up slightly, but I assume many of you are probably wondering what is really going on here. So, even though it hasn't been long since my last upload, I decided to film a follow-up and share my perspective once more, clearly and directly. But before we dive in, make sure to hit that like and subscribe. It's what keeps me going and motivates me to keep making these videos. So first, let's break down the current market situation. So this drop to 110.5k, the reason behind it seems pretty obvious. Whales and the market makers were just playing games with the Bitcoin chart. The dump triggered panic and scared retail rush to sell. But what did I say in the last video? The chart being driven by the market makers who want to keep this bull run alive is Ethereum. That's why the real focus has to be on ETH. This part is actually critical, so let's quickly review the key points from the last video. But in contrast, the ETH chart tells a different story. Looking at the uptrend line that's been intact since June at 2100, ETH never actually broke it. And even during the recent drop, it found support right at the trend line and bounced. Now the price is trading well above it. And that was the hint, the signal that the Ethereum chart was already putting out. So that the reality is, ETH is the one dragging the entire crypto market by the collar right now. So like it or not, keeping a close eye on the Ethereum chart has become essential. So it's fair to say that the ones holding the wheel right now are steering with Ethereum. So basically, just a few months ago, market makers were holding up the bull run through the Bitcoin chart, while Ethereum was their playground. Now it's pretty much the other way around. So by looking at the charts right now, left is Bitcoin and right is Ethereum. If you see Bitcoin here, Bitcoin has already formed a double top and only managed a sharp bounce right at the neckline. And some of you might find this 110.4 neckline familiar. This is the exact level I used to set as the stop loss for one of my earlier Bitcoin long positions. Ethereum, on the other hand, hasn't even touched its neckline. In fact, it hasn't even broken its uptrend line yet. And that's why even if this uptrend eventually breaks and the market rolls into a full downtrend, I believe the market makers will still push price up first to absorb liquidity above. And with all the liquidity stacked overhead, from the Bitcoin chart's perspective, even with some shakeouts up and down, I expect the move to at least 117k area. Of course, it could push even higher. And as I said, I'm not jumping in right now. I'm waiting for the best entry. So the long entry zone I'm watching is the same as in my last video, but this time I'll break it down more simply. So on the Ethereum daily log chart, draw the uptrend line from the 2100 low back in June. You'll see that the retest zone around this trend line has been a solid long entry. So I can consider this trend line highly reliable for now. So that makes my first entry plan simple. So when Ethereum comes into the trend line area, I'll enter half in Bitcoin, half in Ethereum. And nobody knows exactly when it will touch the zone. If it happens this week, probably looking at the 43 to 4500 range. So what would Bitcoin price be at the time? Nobody knows. Even that 112 to 114k range I mentioned in my last video was just an estimate. And now with Bitcoin price dropping even further at this moment, the actual price when it reaches this trend line could end up being lower. The key point here is that once ETH comes down into this trendline zone, that's where I'll be taking the long position. Simple enough, right? But here's the thing. Once retail starts catching on that market makers are steering with the ETH chart and they all begin trading off this trend line, market makers can easily drive price lower on purpose. And that's why the second entry zone that I'm watching is the open of the massive green candle that printed right after Powell's speech, which aligns with the midpoint of the bullish engulfing candle that swallowed the previous red bar. And as for the stop loss, it sits at the level where the bullish engulfing candle breaks, a danger zone where the uptrend risks breaking down. And just like on the Bitcoin chart where a double top forms and it could flip the trend bearish, so that's roughly around 4,000. And I'm splitting entries into two zones, But keep in mind the stop is still a far distance away, so it's important to manage size and leverage accordingly. And if price never gives up the entry and just takes off higher, not a problem. We'll analyze again up there and take the next best setup. Okay, so to quickly summarize my view, 1. Market makers are driving the market using the Ethereum chart. And 2. Define the best entry zones and stop loss before acting, and then wait for price to come to you. So my first entry is the retest of the uptrend line. My second entry is around 4,200. My stop loss is near 4,000, where the bullish engulfing candle breaks and the neckline risks giving way. And 3, outside of this, I don't see a clear swing long setup right now. And of course, I still take quick scalps and quick trades here and there, but I can't realistically share every trade on YouTube. And 4, if price never gives the entry and just runs higher, that's fine. We'll simply look for the next setup at higher levels. And one last thing before I wrap this up. No trader on this planet wins 100% of the time. If you ever find one, let me know. I'll follow him myself and learn. So here's my point. Whether I'm right or wrong, I'll keep posting my views with conviction. At the very least, you'll never hear me give a half-baked call like it might go up, it might go down, just to turn around later and say, see, I told you. And even if I'm wrong, you won't hear me excuse it with, well, I managed it myself and got out fine. And if my view gets wrong, I'll admit it cleanly. And if my outlook changes midway, I'll post an update, either with the video or at least here in the community. If you go back and watch from my very first video, you can clearly see for yourself the hit rate of the calls I've made. So basically, when I'm right, we win together. When I'm wrong, we take the hit together. So make sure to stay with me. I'll prove it with results. That's all for now. See you in the next one.